Here we are, day before FOMC, and this is the high time frame. I don't go and look at the monthly that often, but when we're a day before, it's good to get a perspective. On the left, the S&P 500, you can see we've got this doji bar hanging around above the zip code of the 3 EMA. 6033.96 is coming into the 3 EMA, and I'll talk about these dashed lines a little bit later on a lower time frame. But look on the right, the Nasdaq's completely different. We have a big, chunky, blocky, rectangle green, and it has new highs, much different than this doji. The doji candle right now, we're a few minutes from the Tuesday New York close, is really not violating with the body the prior month. The current December monthly doji is a very thin body, but it doesn't seem to want to go above the November candle body. Only the candle wick, the premium wick's done the damage. On the other hand, the Nasdaq 100 micro futures has a candle body that's way above the prior November all-time new highs. So that is very important thing because I'm a two-way trader. I need up, I need down, and I just do not like one-way tickets like we've got here. So let's go to the next chart. Three charts, left to right, Dow Jones, S&P 500 in the middle, on the right, the Nasdaq. This should tell you something's amiss. We've got a problem because these do not sync up at all. There's no synchronicity. Because of the disparity between these three charts, something's amiss, and I suspect this is manipulation. So Dow Jones, you saw a few headlines. Look at this, just straight down like a waterfall, and it's not stopping. Candle body after candle body, and we're below the 9 on the red and the 3 EMA on the blue. And we're going to cover extensively the S&P 500. I like it. There's a range here. And then look at the Nasdaq, usurping everything. It's just the total rebel going up, and it is not having any respect for any sell side liquidity levels at all. It just keeps going up, and these are daily high time frame charts. Before the Fed, this is the day before the Fed, Tuesday, we just closed, and you look at and study these candle bodies, and what you get is the Nasdaq had none of it. It tagged with the discount wick, that 3 EMA, and you can see here on the 3 EMA on the daily, we were below it on the S&P and below it on the Dow. So that's cause for concern. This is one of the telltale signs that has my attention. On the left, the US dollar, very important. If we've got a trending up dollar and we violate, I'm looking for the violation of this dashed line. You see these candle bodies right here. These candle bodies represent the highs prior month. And what I want to see is if they can violate it in either late December, early January, that's going to put a lot of pressure on the equity markets to not be hanging around the zip code of all-time highs. So you can see we're very close to that. So right now, here we are, day before FOMC, just about to close on the market. You can see it's very much flagging here after a trend up. And I am looking to see a higher dollar here in the next couple of weeks. On the right is the VIX. This is the volatility measurement. And you can see after the elections how we had a big gap down. Then day 11 after the elections, 1879 was the high. We come down on day 22 for a low. And what we've done just now today is between day 11 and 22, we just crossed the 50% fib. So that's a signal here that volatility is increasing here. And it could be just because it's the day before the Fed, but still, we're definitely several days above the lows, which were in the high 12s. And right now we're just under 16 on the VIX. So this is something to watch. Volatility has been very compressed as we've had all-time highs hit record highs on the Nasdaq and especially the tech sector. And S&P 500, as we pointed out already, not so much. But let's flesh out some more charts here and get lean on where bias would be on direction. 4-hour charts, higher time frame, left side, Nasdaq. We closed Tuesday, the day before FOMC Wednesday, and the close on the Bollinger Bands is 4 hours. Look at price, how price just hung above this middle black line. That's the middle Bollinger Band. We are in a premium still, and it's just not ending. You can see back here a few days, this thing never with the candle body wants to violate this middle Bollinger Band. So I'm not touching the Nasdaq for one reason. There's no two-way market here. It's all one way, and it's lofty. It's high. We talked about that with the monthly chart already. I've marked with these dashed lines, minor sell side low liquidity and minor buy side liquidity up. And all these dashed lines technically are above the middle Bollinger. So no opportunity for my liking here. On the right, however, I'm very much liking the price action here because we've got up and down. We're piercing this middle black line, which is the middle Bollinger Band. 6138 on the middle, 6159 on the top Bollinger, and the lower Bollinger has been touched multiple times with discount candle wicks, and that sits at 6117 and change, 6117 and change. And where are we? We're different than the Nasdaq because we closed below it. Below what? Below the middle Bollinger Band. So discount here, premium here. So yeah, if I'm going to short, I'm going to wait for my setup, and the best opportunity could be when we tag above, maybe with a candle, this middle Bollinger Band. But all I'm saying is, this is why I'm not touching the Nasdaq. I tried it once this year and I got badly burned. I'm going to be forever for the foreseeable future in 2025, continuing to trade the S&P 500 just because of this two-way action here. So the dashed lines here, minor buy side liquidity is 6152 plus, 6164 is another level up there. Minor sell side liquidity I've got down here, right where we closed, or the low of last Friday, and that's at 6110, and 6107 is the Tuesday of the prior week before CPI. So these are just some levels. We can see it easier on a 1-hour chart, but I wanted to go over it. So let's go on to a smaller time frame. All right, S&P 500. So I love this chart right here because it's a naked chart without any indicators. On the left, I've got a range chart, Renko with some Keltners, similar to like Bollinger Band, but I want to really look at the range here. Basically on upper 6189, lower 6080, right there. That's 100 handles, right in the middle, coming in at 6132. And let's look at these lines. The 1-hour chart's real clear. You see the sell side liquidity on these dashed lines. I pointed it out, 6110, 6107. This is last Friday. This is last Tuesday. And then up here, buy side liquidity. So the strategy is going to come down to which are we going to hit first, because two-stage delivery. That's what my mentor ICT said many times. 2024 mentorship, you got your announcement. 30 minutes later, you've got your news release. I would say three-stage delivery, because let's say I don't want to take a trade Wednesday on FOMC, and because we've not really hit any of these and we stayed in the middle, maybe I wait for the big move the day after. I've seen many times FOMC the day after be the day of a giant reaction. What's going to have me looking is, these are the ranges that I'm very interested in. And the question is, what time is it? And there's only going to be 3 times I'm interested in. The time of the announcement, the time of the news release, or the interview 30 minutes after the announcement, and then the day after. And specifically what time the day after, I'd say 10 a.m. to 11 a.m. silver bullet. That would be the best. And that would be it. 3 times for the strategy. I'm going to watch this chart out of all of them the most because it's super clean. You can see we've definitely had here since CPI a good amount of displacement down. And then after Friday, we hit a low. We went right back up here. And Monday was crazy up like a rocket. And then we go up here to a high, but we did not break the high of CPI Wednesday. So that is 6169.75. So the high for Monday was 6164. And then Tuesday was pretty muted. We displaced lower and I was lucky. The only thing I really caught here was I bought at 61.43 a single put on the spiders, and sold it on Tuesday morning, bought it midday with Monday because we just were so far up. But totally flat with dry powder right now. And again, it's about strategy. You put everything together, something's amiss with manipulation. And whatever the number is, I'm not so concerned. It's the reaction and the reaction time. So just to sum it up again, you've got the ranges. You know why I'm not trading the Dow or the Nasdaq. They're the polar opposites. The S&P 500 is the sweet spot in the middle. We've got up and down action. We've got our markers on the up and down side, and now it's on this 3 times. If I am going to take an FOMC day trade, it's not going to be until the afternoon, and it would be after the announcement or after the newscast on the interview. And if I don't do either of those two, then it'll be the day after on the AM New York session on the silver bullet. I appreciate you guys watching. Thanks so much for stopping by, and welcome all new subscribers. Aloha. Take care. Bye.